Moonraker is a new bespoke decent trader tool based upon mean reversion strategy. Mean reversion is the trading principle that an asset's price will tend to converge to the average price over time. Moonraker has multiple components that allow the trader to use it in ways best suited to individual traders' style. In this video we're going to be using it on the Bitcoin chart, but it can be used on any trading asset. Moonraker is designed to be used on the 1 day time frame, but it is also highly effective on other time frames such as the 3 day and the 4 hour. The key benefit of Moonraker is to help keep a trader directionally long or short in the market for as long as possible. Let's take a look at an example where the trader would take a long trade position. In this example, we're starting on the 12th of December where Bitcoin price closed above the mean reversion line. That is the first condition we need to look for. Once the asset closes the day above the mean line, the trader will wait until the following day and look to place bids close to the mean reversion line. So the trader in this example on the 13th of December would have set their bids around here near the mean reversion line and got filled, and they would then have remained long until one of two conditions were met. The first is if these dynamic stop loss levels are hit. So you can see this red line here. The trader would have got stopped out on the 21st of December when price came below this intraday stop loss level. So they would have closed out in a profitable position. These dynamic stops can be used at the trader's discretion and can be turned off in the Moonraker settings. If a trader would prefer not to use them, there is a different condition that needs to be met to close out the trade. The trader would have stayed long until price closed below the mean reversion line, which we can see here in this example happens on the 11th of January with price closing the day below the mean reversion line, and we can see that the mean reversion line turns red to indicate that to us. The trader would then wait for the following day and set their asks near the mean reversion line and wait to be closed out on their position when their asks are filled near the mean reversion line. And you can see in this example this was also a highly profitable trade for the trader. Now the same can be done in reverse should the trader wish to take a short trade. They'd wait for price to break below the mean line and set orders near the mean line the following day. Once price reverts back to it, they would be filled for their short trade. The volatility bands either side of the mean line can be used in two ways. The first is as a partial take profit to the strategy we just discussed. So here we can see the trader would have entered a long position the day after price closed above the mean reversion line, and they would have stayed long, but the volatility bands offer an opportunity for the trader to take some partial profit because they indicate that price is getting overextended and may need to revert back towards the mean line. And you can see that happens here, comes back close to the mean line, so the trader could have taken partial profit here and also up here and here, and then reverts back to the mean line. The second strategy is for scalp trading. So completely separate from the trading strategy we just discussed, a trader has another scalping strategy using Moonraker where they wait for price to come into one of these bands and they would enter a scalp trade when price enters the band and then look to take profit near the mean line. So they would wait to enter here and then close as price moves towards the mean reversion line. And this scalping strategy is very effective with Moonraker. Finally, there's another feature with Moonraker, which I'm now going to turn on. So you can turn these on and off yourself when you have Moonraker. And you turn on support and resistance lines by clicking this button here. If I zoom out, you'll see we now have these green and red support lines. And if we zoom into recent price action and the recent price crash for Bitcoin, we can see they offer yet another strategy using support and resistance lines. We would enter a trade when price comes down to these support lines, assuming we are not already in an existing trade. So if we're not in an existing trade, we would wait to enter when price reaches these support or resistance lines, and then close when price reverts back towards the mean line. So again, very similar to the volatility band scalping, we can use support and resistance lines as scalping trades, entering when price reaches near them and then closing as price reverts back towards the mean line. Finally, Moonraker can also be used with other indicators such as the Decent Trader Predator indicator. Phil B, the creator of these indicators, uses both Moonraker and Predator on the same chart because these can give additional context and confidence when entering a trade. If, for example, here you can see price started to close below the mean reversion line, and also you can see moved from green to orange and eventually red, so giving higher confidence that there may be a shorting opportunity. You can purchase Moonraker on the Decent Trader website, and we hope you enjoy using this powerful tool.